be doing some week ahead outlooks here. Oh, and it looks like my stream's still in 1080p, but at least it's in 60 FPS. Alrighty. Let me know how you guys are doing today. Some of the things you'd like me to cover and give some commentary on. But today, we're going to be following up with the moves that have occurred so far today. Man, oh man, it's been a choppy day, if I say so myself. Eurodollar, flat. Let's just check out the DXY. Flat. ES futures. Oh, nice little rebound. Man, the ES just had the kibosh put on it yesterday, didn't it? NQ. Also same situation. Nice rebound so far today. It's probably going to go up to, at least on the futures here, to 15.05. I wouldn't be surprised if it went just a wee bit higher today. Let's see here. What else is there? ZB, Treasury bond futures. Hey, there you go. So this meant that the yields went super high. Let's see here. How about stocks? Euro stocks 50, right? We can check out the futures for that market. Also down yesterday and a rebound so far today. So that's a nice little bit of review for what's happened so far today. Let's see here. Any update on what we got going on with Ford and Stellantis? Apparently, Ford has been making progress today on their negotiations with the UAW, so they got a nice little pop today. You can actually read the article from, I think, Reuters talking about this particular move forward in negotiations. Apparently, Ford did a big concession. I don't know what that concession is quite yet, but it's prevented the UAW from starting more strikes on Ford plants. So Ford got a nice little bump out of that. Let's see here. Biggest performing asset in the FX field is New Zealand yen right now. Well, probably because the Bank of Japan came out earlier today and said, we ain't doing anything. We aren't changing nothing. Of all the analysis I got today, I went through about 100 emails before the stream. Probably more. And you'll actually be able to see some of that work today here when I go and I pull up the research today. This is some of our week ahead outlooks that I post into the Plan the Profit Discord. And so we're going to be going through some of these today. It's going to be an outlook stream, you guys. We're going to be doing some of this stuff when it comes down to our range probabilities, but like, come on, man. There's not much to do today. I mean, I did let's see here if that'll load. Let's see here, Sync Global. Yeah, there you go. I did catch that short today. Probably a bit right on time, frankly. I wish I got in a bit higher here, a bit earlier, but I don't know if you guys saw in the general chat today on the Discord, but man, oh man, I was like, dude, I'm going to wake up early. I'm going to do my stream right on time, because yesterday I missed it. There was no stream yesterday, guys, because I got some new internet here. So I had to let the repairman come through, install all the stuff, and yeah, my man. We got faster internet now. We'll have faster, higher quality streams now here on YouTube. Things will be a lot faster, a lot nicer. And so yesterday there was no stream because of that. And today, when my alarm went off, the vibrator from the alarm made the phone fall off the desk, and so Yeah, no alarm for me this morning after that happened, and then I just slept in for like another 3 hours. I feel quite refreshed. I feel quite refreshed and ready for the weekend. I feel very, very happy. And hopefully that comes off on you guys. And you guys get to enjoy your weekend as well. But we're not quite there yet. We're still here on Friday. We got about, call it 4 more hours till the weekly close, right? So let's go ahead and use this 4 hours of time productively so then we can get all of our work done now, and then we won't have to think about charts or trading or anything until, it comes Sunday, market open, at least on the FX side of things. Alrighty. And remember, the streams will be back on Monday, 4:30 a.m. Pacific, 7:30 a.m. Eastern. That's when these things start. Okay, doke. Let's go ahead and get the show on the road. Let's see here. Gold? Gold had a nice little rebound. That's probably a good short. How did it perform on this crazy day? Oh, wow, I was just 1 bar off. Yeah, check that out. There's a peak right there in your distribution for shorting gold. Right there. And hell, there was even this thing here for going long right at the beginning of the day. You know what's neat is that I don't have to, it doesn't take data from the future. There's no look forward here. So this is what you would have seen on that day. But you know what? Probably someone would have taken shorts at that spot, maybe got stopped out there. And then, yeah, hey, there's another shot there. And stop up here. This is where not risking 1% of your account per trade comes in handy. Because if there's a 50% shot of you getting hit and losing those trades, it's like, why would you put 50% of your risk on for those trades? Okay, doke. So yeah, that's a nice little analysis back on what happened over here on gold. I mean, I'm not trading gold, so it's like, eh. How about oil? People are ranting and raving about oil, but in the outlooks that I've seen today, it seems like the expectations are still on the bearish side for oil, at least in the most intermediate short term. And that's the impression I got from the outlooks. So it's like the future expectations going into, let's say, like going into kind of like November, December. That seems to be positive for oil, but it seems like over like the first half here of October, it's on the bear side. And I still don't know what to totally make out of it, but that's the impression I got from looking at the outlooks as far as oil goes. And yeah, man, that is a nice little rebound. That's probably the top for the day, no? That's probably the top for the day here. Yeah. I mean, I wouldn't be surprised if it just kept going and drifting higher from here, because it's end of the day, end of the week. Yeah, I don't see any reason why it would snap back from here. So that might not be the best spot to actually take a shot, but I bet some people would be taking that shot. I don't think I would. Crypto going sideways. And that was a half decent spot to short. Not so much there. Yeah, look at all this crypto getting hit. Had this nice pull up, and reverse. But it's still, all in all, up over the last 3 weeks, although it's only up by like $1,000, right? This is 25.5 and this is 26.6, so it's only up by like $1,000. Let's see here. Almost like 80% of this trying just from here to scalping Aussie dollar. I'll just have to be behind live, man. No comments from me incoming. All right, I hear you. I hear you, Ari. Hi, Rod. Nice to see you. New Zealand Cat. All right, I'll do that now. And James, good morning, you guys. All right, nice to see you. Yeah, it's gonna be a quiet stream. You guys are gonna get a bit more of a personalized treatment. Hopefully, the people who watch this recording over the weekend also enjoy it. Alrighty, New Zealand CAD. Wow, check that out. That is nutty. Yeah, this is kind of what I call an ice skating rink here. Price just slides for as much as it'll give you. See, you got a peak in your distribution there and a peak in your distribution there, and then a uniform set of probabilities in this spot here, because you can see how all the probabilities in this area right here are all very similar to each other. This looks, it's not perfectly a uniform probability space, but I mean, when all these numbers are give or take within half or 1% of each other, it's effectively pretty uniform. At least that's my interpretation of it. So this is the edge of that uniform space before you start getting into a sort of real tail risk stuff where you see these are like all less than 1% probability spaces here. Yeah, like you get very thin odds. These are very tail odds up there. What's nice is that this distribution also follows power law, so it's able to, at least accurately, more accurately than a lot of other distributions, model some tailing. Let's see here. Yeah. This probably would not be the best spot to take a short based off what I'm looking at, because it's, I mean, dude, it's 3-4 hours to the end of the week. It'll probably end up closing up here, right? Like, just like with the other chart that I was looking at, when it comes down to making decisions on when you're at the end of a period and you're at a likely high or you're at a likely low, but you gotta think about it. Like, how much time do you actually have for that trade to become realized in the way you're anticipating? So if you, let's say, actually did go short here, you got like 4 hours left in this week before the next week prints, and then all these probabilities shift over into next week. And now, I mean, if I do a little bit of measurement, so let's see here. Conservatively, let's call that 0.3. And on the more aggressive side, let's call that 0.6. So if we closed right here at this current price, you're pretty likely to hit even this spot up here on the 0.3 side. And then 0.6. Like, you could, there's a not so insignificant probability next week that you tap these levels up here. Like, yeah, that you get close to this 81 spot. That's not out of the cards here. That's not out of the cards. I mean, and that's a super positive move. Yeah. See, a big reason, so I'm just trying to think now, okay, what is it I'm actually looking at here? I'm looking at New Zealand CAD. Well, based off the outlooks I got today from the Reserve, not from the Reserve, from the Royal Bank of Canada, the RBC, they just did a whole report on how they have negative expectations for Canadian GDP. Yet, we just got New Zealand GDP, and that outperformed by like a full 0.5%. That was insane. Every single outlook that I read, Westpac, ASB, BNZ, every single outlook from every single institution that does any sort of analysis on New Zealand was like flabbergasted. Like, how could we be so far off the mark here on our GDP print? Your target's 83. Man, 83 is a ways away. I don't know if I'd be targeting that myself. It's pretty low chance, but I don't know. Maybe you're going to be swinging it for like a few months here, going into the end of the year, maybe. Understand though that the New Zealand dollar has been frequently out of the G10 currencies at the bottom of the list in performance across the FX space. Very, very frequently, it's been the worst performing currency. So the fact that it's got this nice bump here in GDP, it certainly helps it out. And what would actually significantly make this outperform to maybe even hit that sort of target is if the China rebound actually occurs. I mean, I keep keeping this in the back of my head, like all this stuff going on with, actually, you know what? Danske Bank even talked about it today in their outlook. So, oh boy, here now it is his outlooks. Let's see here. Is it this one? No, that's their weekly focus. And that's their yield outlook, and then this is their FX forecast, yeah. You can see I have a lot of tabs open. I got a lot of outlooks for the week ahead here, you guys. Thumbs up for the broadcast. Nice to see you, Psycho. Nice to see you, Isaac. We're getting into the week ahead outlooks here in Alaman. Let's see here. Yeah, no, I see it. No, I'm familiar with you use the same icon. Yeah, my man. I see you. Let's see here. So this is Wells Fargo's week ahead outlook. They say, you know, Wells Fargo is one of the few institutions that is very consistent on doing analysis on leading economic index. And they just see it going down and down and down and down. And it keeps them paranoid about expectations going out into the future. Treasury yields and oil prices suggest economic growth will slow in the months ahead. Gotcha. G10 central banks saw some rate hikes and some rate holds with differing messages, also on the likelihood of further monetary policy in the months ahead. That's nice to see Wells Fargo bringing up this particular word here with differing messages from these central banks, because that's actually something that I think got specifically outlined here in the yield outlook by Danske Bank too. Yeah, you can see how they're like, dude, there's all these expectations for all these central banks. The idiosyncratic risks of all these central banks is really starting to take priority. I even set up a message about that, I think, in the... Yeah. There was another Danske Bank outlook that did a great breakdown of the Eurozone's TLRO settlements and the amount of euro liquidity that the central bank has, whether or not they want to do a lot of quantitative tightening to pull back on the amount of money printing that they've done, and how aggressive they should be. There's a lot of views on that in that TLRO. Let me see if I can find that one. Yeah, this is the outlook that I'm talking about. You can find this in the Outlooks channel, and I bring it up in the general chat because I found reading this particular outlook especially helpful, because it turns out that the Federal Reserve, there are Fed watchers and commentators that have the same expectations for the FOMC as Danske Bank here has for the ECB. And as I go around reading outlooks, I'm starting to find blips of people talking about this particular idea for the week ahead. Not just for the week ahead. This is like a lot of these expectations go to how quantitative tightening could progress for the ECB and FOMC going into 2024. So this is good stuff to get educated on. This is good stuff to learn about. And I'd say read these things. I'd say figure out what these things are saying. And again, once you read through them, if you got questions about them, you can hit me up in the Discord, in the general chat, and say, hey, Joe, you know, what's this about? Why are they focusing on this and that? And, you know, I'll do my best. I'll do my best to help out. We just want to help people learn more about the world. And when you learn more about the world, you can get better at trading. Let's go ahead and keep checking out this stuff. Existing home sales way down. Continuing jobless claims starting to come down more. Nice negative trend there. The resilience of the US economy continues to be impressive, but the headwinds are becoming stronger as 2024 comes into view. Yeah, Treasury yields climbed higher yet again this week amid a hawkish message from the FOMC. Oh yeah, this is their LEI commentary. The leading economic index declined 0.4%, which is 40 basis points in August, and has fallen for 17 consecutive months. That's why they got ants in their pants about the LEI, Wells Fargo. Shaky consumer confidence and inverted yield curve and weak new orders in the factory sector are the primary components weighing on the LEI. We expect economic growth to slow in the coming months and outright contract in the first half of 2024 as part of a mild recession. So yeah, it'll be interesting to see if that gets realized. That the recession we were expecting here in the second half of 2023, everyone's continuing to push back that expectation down into the first half of 2024. And I wonder if it'll get pushed back again. We'll see. It doesn't seem all that likely because all these central banks do like they're going to be gearing up for tighter monetary policy during the first half of next year. And that could induce slower and slower growth. And then just hopefully the growth isn't too slow that it causes a financial crisis in China with their banks and their real estate sector. Because, you know, it hurt a lot of people in the world if China collapsed. We don't want China collapsing here. If China doesn't collapse, we probably don't have to have a super hard hit recession, right? Powell can get his soft landing done, but that requires China to and their Jenga tower that is their economic system to not completely fall over. Oh man. All right, let's keep going here. Personal income and spending comes out next Friday. Gotcha. Durable goods next Wednesday. Home sales. And yeah, so that's just for the United States. So we're getting a bunch of microeconomic data that'll help figure out forecasts for the macro data. Central banks here, there, and everywhere. Yeah, man. So this, I'm not going to end up going through all this stuff. Let's see here. Yeah, check this out. The Bank of Japan's monetary policy announcement this week was very benign, with no change in its policy or 10-year bond yield target. The only reference to a possible policy shift, BOJ Governor Ueda said that if the inflation goal comes into sight, authorities could mull whether they need to lift interest rates or end the yield curve control program. Based on recent economic trends and central bank comments, we believe the Bank of Japan is unlikely to contemplate a policy adjustment until next year at the earliest. And this is why I haven't seen much as far as BOJ research comes out today. I mean, I have the policy statement for the BOJ right here. Let's give it a second. And we can go over this real quick. Decided by unanimous vote to keep the cash rate at negative 0.1%, negative 10 basis points. And they've done nothing to their long-term interest rate. The 10 years will remain at around 0%. Yeah. Conduct on yield curve control, unanimous vote. The bank will continue to allow 10-year JGB yields to fluctuate in the range around plus or minus 0.5% from the target level, while it will conduct yield curve control. Yeah, so this is just, it's exactly the same policy as they've had before. If we go to like Euro JPY, it's probably up. Yeah, it's up on the day, and you can actually see the yield differentials are coloring this whole section green. After that central bank meeting, I wouldn't be surprised if we actually did have our pop up for like 100 or 200 pips now over to here, now that people know what the central bank policy is going to be. Let's see here. Probably not. You're probably not going to hit it. So let's see here, that's like 0.7, like 0.7, 0.8. Yeah, like you'd really have to stretch it to reach that spot. I don't think you're going to be reaching that spot. Like, you'll probably hit the upper half of the 158 handle here on like euro dollar next week. Maybe you'll hit the psych level. You'll maybe hit 149 next week, maybe. But yeah, based off that expectation for literally what we just read here from the BOJ and in our outlook from at least Wells Fargo, yeah, like this is same old for Japan. This, like, hell, US dollar yen, USD JPY, yeah, check that out, up and away here. Very positive yield spreads going on. You can see the step up here. These are all of our yield differentials lagged with themselves. It's very, very positive, very, very bullish. From today to yesterday and today to 7 days ago, this is all very, 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 this is some of the most bullish yield spreads I've seen since like way back here. Yeah, so I would not be surprised to see dollar yen reach 150 here, but that seemed to be the expectation kind of around the board for most analysts and most outlooks who were doing any sort of analysis on the dollar yen exchange rate. Let's see here. I just want to do a real quick checkup. Euro dollar, how is that one turning out today after the PMIs? Still weak, still down, as moving as expected. I'll go ahead and hide the research for a second here as I go through this stuff. What's nice is I got that little top. Nice. Nice. Good. I'm still anticipating a bit more of a move down. I would still like to see 106 hit, but you know what? Sometimes the market just doesn't give this to you. Sometimes that's the low for the month. Sometimes it's like, oh yeah, we haven't moved down far enough yet. The yield differentials are quite mixed when you look at them. Yeah, you can actually see the table over here. Yeah, quite mixed, at least on the day. Alrighty, let's go ahead, hide that real quick. Let's check it out for the week. Yeah, I was anticipating a move to like the level of 106 because there is a bigger density right there. But real quick here, let's see, that's like 0.5, close from here, going down to 0.5. Yeah, I'm gonna have the same expectations going in the next week here. And on the Aussie side, yeah, that's all looking good. There was the rebound here today. I know a guy who shorted up here, right? Put the stops still here in the trough in the low probability space. and then exited right here. And here I am wishing, oh man, if I had just done that, man. If I had just done that, you know, it's like easily a clean 100 pips trade. Easily a clean 100 pips. But I would like to see my future expectations get realized, and maybe we go to those monthly targets that I still got my eye on here. But you know, sometimes you're not handed everything on a silver platter here. So let's see here. That would be let's say 0.25, and that would be 0.6. So from here, this would be 0.25. So yeah, so that'd be a pretty short pullback there. Yeah. And then let's see here. That was 0.5, right? No, it's 0.6. 0.6 is roughly around there. Yeah, so now that I'm looking at it, the right move for me would have been to actually exit this trade right then and there. Oh well, we'll see. We'll see how this plays out. Man, that New Zealand is still trucking along here on the day. I just got this one set up for the day. I was like, you know, I like this potentially being the top on the day here, and so I took the shot. I'm like, we'll see. I particularly liked the closing odds for the day. It was something like, what was it, 83, 84% of the time, the close for the day comes in below this price right here, 59.7. So I'm like, okay, I'll take a shot. If you're gonna hand me an 85% probability trade, yeah, sure, you know, I don't mind risking 10 basis points. Maybe I'll make another 10. Maybe I'll make 15 or 20. You know, yeah, pad my P&L just a little bit. Yeah. So that's all nice. So cool. We did a little bit more trading analysis here. Let's go back to our research, all the good stuff. So that's the BOE policy rate. This is their forecast. Hold into middle of 2024, or that looks like first quarter or second quarter, end of first quarter, beginning of second quarter, when they're starting to anticipate cuts from the BOE. Another thing I read is that there are expectations that the ECB will probably be cutting rates first before the Bank of England does. So there's some people who are looking at 2024 potentially for like long pound, short euro, so like short euro pound, but that's like months and months and months away, and we actually have to see that sort of risk realized. Emerging market stuff, gotcha. I'm starting to pay attention more and more to the South American economies recently, because now that oil prices are much higher, there's a lot more economic discussions going on in those countries about how much they should start doing oil production when oil is at these higher prices. So we'll see how these countries perform going forward into the fourth quarter, and which ones actually kick up their oil production. And that's one of the reasons why there are some negative expectations going into the fourth quarter of 2023, because there's some expectations like Venezuela and Colombia will come back online with some production and send that over to the US and send whatever nat gas they got over to Europe, and, you know, go at some of these very, very high prices. And then also some shale. Some US shale operations are starting up again, because when oil's here at $90 a barrel, they can actually afford to come online. And I think the Saudis might be shooting themselves in the foot if they probably don't start increasing their production just a little bit here. because the next step would be in order to keep prices high as supply from South America comes online, they'd need to do more cuts in order to keep the pricing higher. But then they would be cutting the amount of volume they'd be selling, so the total amount of profits they'd have would go down. And they would succeed in keeping prices elevated. But all of the gains would just go over to South America because they'd be increasing their supply. So it doesn't seem like OPEC is totally on board with what's going on in South America, though. So hopefully some people from OPEC go over to South America, try and get them to not produce that oil. But it seems like it's a considerable risk because a lot of the U.S. is going over. Apparently, we've been in talks with Iran and Venezuela for months and months and months and months and months trying to get them some more. And now that oil is high enough, it seems like there's definitely like some more push from governments in South America to say, hey, get some of that oil going because we want to dip into that piggy bank there. Yeah, man, black gold is a wonder to an economy. Oh, looks like my camera just froze out of nowhere. I don't know why. Here, let me turn the camera off and on again. That usually works. One sec. Let's see here. Deactivate and activate. Yep. Alrighty, there we go. We go. Now you guys enjoying the commentary so far. I think this is some pretty insightful stuff. I think this is some pretty good commentary, if I do say so myself. I'm kind of touching on everything here on this stream. I'm making up for missing a stream yesterday by giving you guys some good stuff. I'm getting through some really good charts, going over some range probability strategy, going over some outlooks for the week ahead, and man, we're already 40 minutes into the stream, and I don't feel like I'm even halfway done yet, man. This might be the stream might be on the longer side of things, you guys. Because I want to go through these outlooks. Oh, there's some China stuff here. Chinese PMIs on Saturday. Yeah, next week, market participants will be watching the release of China's September PMIs for any hints of potential economic stabilization. Alrighty. So maybe in the 3 to 4 days leading, maybe in the 3 days leading up to this event, I may want to put on some China hedge, because if those PMIs come in super, super hot and they come in nice and positive and good for China, man, I might want to be short the dollar on that move. Yeesh. Because that would make Australia and New Zealand, that would save their butts, at least short term, on their currencies. But we'll have to actually wait and see how that PMI is expected to actually come out. Let's see here. Thus, we are looking to see whether the forthcoming PMI figures will further reinforce the theme of a Chinese economic stumble. Yeah. It is true some economic data, retail sales, and industrial production surprised to the upside for August, and it is also possible that the September PMIs could also show modest improvement. All right. The consensus forecast is for the manufacturing PMIs to rise back into increasing territory above 50 at 50.2, which would be the first reading above the break-even 50 level since March. Oh. While the services PMI is forecast to rise to 51.5. Nonetheless, those PMI readings would still be at subdued levels by historical standards, and accordingly, our outlook remains for subpar performance from the Chinese economy through 2023 and 2024. Well, on the short term, that is quite interesting. That is quite interesting. I wonder. China PMI. Oh, sweet. I can pull up the Chinese PMIs. That's from July, August, September. Are we behind by one PMI reading? No, it doesn't look like we're behind on a PMI reading here, because that's the services. No, that's composite. That's interesting. They don't put the composite here. Yeah. So that's the actual composite PMI here at a trading view. Yeah. Let's see. China PMI manufacturing. Yeah, China PMI manufacturing. This thing was at 51. The consensus forecast is for the manufacturing PMI to rise for September's PMIs. So why are they saying we would like to see China's manufacturing PMI go above 50 when this is showing above 50? And this is the S&P Global data. So that's August. So is this not the correct series? Like, it doesn't look like the correct series to me. This blue line here on this side of the screen should be the same as the blue line on the other side of the screen. What gives? What gives? All right, I'm not going to dwell on it. Hey-oh, now listen to what I say. Oh, I got your hey-oh. Alrighty. Interest rate watch. Gotcha. This is the review of the FOMC meeting. This is a change in the dot plots. A whole thing on crude oil. I'm going to read that later. Let's start getting through some of these outlooks. Oh, Australia and New Zealand. Westpac's week ahead outlook. The editorial is written by Bill? No, Ryan Wells wrote the editorial here. Let's see here. Oh, yeah, they're talking about population and how that's expected to impact their economy over 2024, 2025. I already read that one. Let's see here. Some rough, some smooth. Yeah, apparently the pricing for the RB&Z's rate hike expectations went up because of the outperformance in their GDP number. But from some of the commentary I heard, it still doesn't seem like that's the majority view held. Let's see here. At the time of the August MPS, the RB&Z projections indicated that the Monetary Policy Committee saw only a 40% chance of their cash rate rising to 5.75 in the first half of 2024. We don't think that the data flow over the past week will have been strong enough to push the RBNZ's view into line with our own, i.e. that the OCR will need to rise. Oh, so Westpac is bullish. At the November meeting, oh, so Westpac is actually expecting a rate hike from New Zealand in November. Huh. We expect they will be closely watching upcoming inflation-related indicators in October and November for a more definitive guide on whether quarterly inflation rates will step down significantly from the December quarter as forecast. Gotcha. All right, so this is something I'm going to probably read the rest of later. Let's see here, data previews. So this is for the week ahead. August monthly CPI for Australia. Retail sales, job vacancies. August New Zealand August employment indicator. And New Zealand business confidence. Gotcha. So that's on Thursday. CPI for Australia is on Wednesday. Germany IFO climate survey, business climate. Impact of rate hikes weighing on German businesses will be looked at for the IFO there on Monday. PCE and then US Chicago PMIs. Reflective of soft manufacturing conditions. Yep. And then here's Saturday, the manufacturing and non-manufacturing PMIs for China. Our best guide to employment momentum across industry and services, the latter which remains key for confidence. Okie doke. So Westpac is also saying, yeah, these are going to be some important Chinese PMIs. Oh yeah, let me turn on the music. Good stuff. Always forgetting the music, Joe. Always forgetting the music. I wouldn't be me without doing that, huh? Alright, let's keep on going. Oh, I gotta send this into the Discord. Exchange rate forecasts out of Westpac. There we go. Yeah, see how they still have bullish expectations for the Australian dollar and the New Zealand dollar? See? Lower number here, higher number here. So they have bearish dollar expectations still. Then again, Westpac has always had these expectations for like the last, I don't know how long. They've always been like that. Oh, I don't actually want to close that. So this is Nordea. The ECB thinks that rates have now peaked, and we agree. I don't think the ECB actually said that they think that. But I think the expectation is they don't need to hike any further. There's still 2 prints of inflation that could come out and change that. But I'm also in line with the expectation, right? Given that we expect the Fed to raise rates once more in November, right, I assume, which is not fully reflected in prices, we do see some upside potential for US yields in the near term. We see less upside left for Euro area yields. All right. And if the US yields are going up, that will be helpful for the US dollar going forward short term. Inflation expectations converge. Let's see here. A longer-term outlook for the U.S. economy is brighter than the euro area. We actually see room for this spread to widen further. Gotcha. Given our more positive view on the U.S. economy compared to the euro area, we also argue that the inflation risk premium should be higher in the U.S., even if both the Fed and ECB target 2% inflation. We thus see upside potential in U.S. inflation expectations versus the euro going forward. And that actually is not good for the dollar. Because it means, okay, when those higher inflation prints actually come out, depending on their proximity to a central bank FOMC meeting, let's say we get the September inflation sometime in October for the United States, and it comes out that, oh wow, inflation really surprised to the upside, even though that's currently not what the nowcasts for September inflation are saying. In fact, they're saying that inflation in the United States, the nowcasts that I'm getting, say that inflation's probably a bit more sidewaysy right now in the US, which is something that the Fed will want to see. But if, let's say, inflation went up 20, 30 basis points, the core continued to go up 20, 30 basis points, that would immediately weaken the US dollar on the release. If whatever pair of whatever country you're trying to trade the dollar against, if their inflation is still the same, if they either haven't had also increasing inflation in their prior print, or their prior print was like 3 weeks ago and the print for that country comes in the following week or in 3 days from now or something like that. There's like this time arbitrage that occurs where, because right now the US data is weaker, the dollar gets weaker, but then that's only there for like a day or two until you either get into the blackout period for a central bank meeting where the odds of hiking are above 50%, or you run into the inflation metric of another country where suddenly now their inflation is also rising. And then, yeah, they talk about Risk Bank, Norges Bank, left rates unchanged. Yeah. The Bank of Japan intern also left this policy. Like, in this entire outlook, they only mentioned Japan in the last sentence. This is why I haven't been able to find anything this week on Japan recently. It's like, what are you talking about? Something happened in Japan? No, nothing happened in Japan. There was a meeting in Japan? It's like... Yeah, I think there was a meeting in Japan. I don't know. They didn't really do anything. Here we go. Avery Shenfield, one of my new favorite market analysts. And this guy is pretty legit. He's been around for a few decades. So, and he only writes 1 page a week, which is like, again, it's like 8 paragraphs. He writes 8 paragraphs a week on his expectations for the following week in the future. And man, it's usually really, really good stuff. For Canada, I think he's one of the best analysts out of Canada, in my opinion. I'm so glad I've been able to find his, reading Avery Shenfield for CIBC is like reading the editorial when Bill Evans gives his Westpac editorial. Bill Evans and Avery are kind of in that same kind of category. Guys who've been in the field, they're writing weekly outlooks, and they've been doing it for decades and decades and decades. Man, I'd love to be writing outlooks like this in a decade or two. Just got to start writing them, you know? And have my own whole research team. Get a research team, Joe. You'll write stuff like this all the time, you know? But yeah, no, I enjoy whatever he's got to say. Let's see here. Canada is not only the least bad in underlying inflation, it's also not the best in recent economic performance. A reason to be patient in delivering any further monetary tightening. The UK picture isn't stellar, and it's suffered a larger climb in jobless claims rate from its lows than Canada. But certainly the US has seen much less evidence of a growth slowdown. It's miles ahead of Canada in per capita GDP gains this year and has seen a smaller bump in the jobless rate. It's commentary like this that keeps me short the CAD and long the dollar. Oh, man, doesn't that hurt? Doesn't that hurt to see that kind of positioning going on? This is what happens when you miss your morning alarm clock. All the people in the who've joined the Discord and seen what I posted in the general chat know what I'm talking about. Oh man. Oh, just looking at this twists my stomach. I'm like, no, my money. Oh man, that's just how it goes sometimes. That's just how it goes sometimes. Oh, that sucks. Sucks, doesn't it? You can't win them all. And then again, what's 10 basis points to you? Hopefully New Zealand will pay me back. That New Zealand setup will pay me back. I got no major concerns over little hits like that. But yeah, let's keep on going. And then there's extra commentary down here, I believe. Yeah. In Canada, the third quarter won't see much of a bounce back from the negative standing in Q2, with July GDP likely flat. Still, the consumer-led momentum we saw back in Q1 now looks like a blip in an otherwise tepid growth trend. One that we expect to be reflected in increased labor market slack as employees adjust their headcounts. Gotcha. So a whole lot of nothing. Week ahead's key economic number, GDP by industry for July. Gotcha. Personal income. Ooh, expected to come down lower. Yikes. Our views are not far away from consensus this week. Strong upside surprise on service consumption will increase bets for Fed to hike once more this year. Anything short of that will keep markets skeptical about additional tightening. Yikes. Yikes. Oh, no, this is a US number. Gotcha. Alrighty. A weekly forecast taking stock of central banks. Key global views out of Danska. Stagnation and periodic contraction for the US and in Europe. US and Euro area headline inflation set to decline further, but core inflation to remain sticky. Fed and Euro policy rates have peaked. Rate cuts start gradually next year. Gotcha. German IFO on Monday. US consumer confidence on Tuesday. Euro area M3, capital goods orders on Wednesday. I think there's some Aussie data missing here, no? And then German inflation, US initial jobless claims, and then Friday we have US and Euro area inflation. Those Chinese PMIs are on Saturday, then US personal spending. Yeah. Again, all the good stuff happens towards Thursday. So whatever trend has been set here going into Friday, Thursday of this week will probably end up continuing into Tuesday, Wednesday of next week until Thursday, Friday of week 39. When we get the major economic data points come out and update our current and future market expectations going into the rest of October, you guys. And we're going to be starting to get some month ahead outlooks for October here pretty soon. So make sure you're in the Discord to see when those come out. Let's see here. Yeah, again, if you're in a Scandinavian country and you're trading Scandinavian currencies, Danske Bank's one of the better outlooks to probably be reading and have under your thumb. That's the BOJ monetary policy report. We don't want to read through that again. Here's SEB's outlook, which is usually a review. Let's see. Economic data may cease to be published, adding to uncertainty for the Fed. Yeah. Not much there. We expect strong base effects will push the year-over-year inflation numbers markedly lower, but that special circumstances will make cross-country movements to differ both in size and direction. We also get consumer confidence in Germany and France on Wednesday. Yeah. Yeah, that sucks. No, don't run away. Oh, no. Let's see. EU harmonized. They don't really make it easy to read that, huh? Consensus and the last. Yeah, so those are definite downside moves. Except for there. For Spain. So for the Euro area. Yeah, I'm gonna look at a different calendar. This one's on the harder side to read. PPI for Sweden, Germany. Swedish business survey. Norwegian retail sales. Retail sales for Spain, Germany, France. We retain our view of consumption being the key driver for more modest growth. Lower inflation ahead should give some relief to consumers. Price levels are still elevated. Here we go. Flash estimate. So consensus previous, Spain slightly higher, Germany lower, and France is roughly about the same. Let's see here. This starts the beginning of a strong base effects kicking in for many economies around the region. Gotcha. Watch out for large movements in the inflation rate numbers, both in headline and core. Last year, September, we found an abnormal rise in German services prices due to the due date of the $9 transportation ticket. In France, we received an unusually strong decline in services prices. Oh, wow. Okay, so they're giving us the heads up here on potential major surprises in European inflation. Come Thursday. Okay. Oh boy, oh boy, oh boy. All right, so that's going to be a volatile day. Yeesh. All right, so I'm going to have to make sure over the weekend I do some more research on this to figure out what some nowcasters are expecting. Yeah, if I could get any, I'm going to make a call here. If I could get any help on this, from any Euro bros especially, I'd appreciate that. Euro area inflation. Let's see here. Strong base effects pushing up the general year-over-year numbers markedly lower, but counter-seasonal and unusually strong price changes last year will make cross-country movements to differ both in size but also direction. Rising oil prices will counteract the underlying decline in the headline number in the near term. The latest PPI reading from Germany suggests the trend of weakening goods prices continues, but when it comes to services prices, we still see elevated price assessment in the PMI, suggesting there are still risks attributed to services prices. It doesn't seem... So it seems like there's a lot of uncertainty in the inflation readings for next week on Thursday and Friday for Europe. Ooh. It's probably one reason why Eurodollar's been going sideways, no? Like, there's a lot of guessing going on here for European inflation. I want to get more outlooks and I want to get more analysis on European inflation for next week here, so we can have some clarity, at least as to the degree of uncertainty we should have going into those events. Yield outlook. Yeah, I think I'll read this one on my own time. Oh, FX forecasts out of Danske. I'll also let you guys read this on your own time. I'm certain a lot of you guys saw this and are like, oh man, it's a whole breakdown currency by currency from this institution. And look, there's a Euro Pound. To end the hiking cycle, but not the Great British Pound headwinds. Over the last month, Euro Pound has moved to the upper part of recent months' trading range at 58.57 cents. On one hand, Pound has gained support from an overall US dollar positive global investment environment and higher energy prices. On the other hand, a dovish BOE and lower than expected inflation have acted as a headwind. Overall, we do not see the global investment environment nor the relative growth outlook create significant divergence between the euro and the pound. We thus expect the cross to only move modestly higher to around the 88 handle over the coming 12 months. Gotcha. Yeah, read analysis like that from... Look, there's Aussie, there's CAD. Yeah, this is something I'll also be reading more in my own time. Boom. Central banks to diverging monetary policy theme on display. Yeah, let's see here. We expect the BOE policy rate to remain at its current rate for an extended period and do not forecast an initial modest 25 basis point cut until May of 2024. Gotcha. Thank you, Wells Fargo, for highlighting your summary in bold. I always appreciate this little stylistic decision. And this is all on S&B, and I'm not trading Swiss francs, so I'm just going to go over that. And that's also for Norges Bank, Norway, the Noki, also going to go over that. It'd be interesting to compare these two paragraphs here to how Danske Bank has their views. Now this is, wow, this is the most bit of analysis I've seen so far on the Bank of Japan today. Thank you, Wells Fargo. Based on recent economic trends and central bank comments, we believe the Bank of Japan is unlikely to contemplate a policy adjustment until next year at the earliest. Same exact commentary we just read from the last time we went over the BOJ stuff. Oh boy. Emerging market central banks more explicit drifts. Yeah, I'm just gonna skip over all that. if you do anything around Brazil, maybe this paragraph is worth reading. You know, what's interesting is that Wells Fargo actually has some particularly great and consistent commentary on the Brazilian economy. Like whenever I need to figure out something about Brazil, I actually go to Wells Fargo or Mexico, actually, for that matter. Brazil and Mexico, Wells Fargo is actually a reasonably decent spot for getting outlook on those two countries. Seb, this is a whole PMI analysis. I'm just going to copy paste this and put this into the PMI thread today. In the research channel, Macro to Micro in the Discord, there's a huge thread of just anything and every article that has to do at all with doing PMI analysis. So I got all the S&P Global articles in there. I got a Unicredit Outlook in there doing analysis on the Euro PMIs. And this looks like it's more Euro PMI, so, you know. I'll go ahead and post this article in there as well. There's like 6 articles in there, and 3 of them are on doing analysis on the European PMIs. General of ending a hiking cycle. ECB 20 to 30% risk for a December hike should be discounted. The ECB raised rates by 25 basis points September. Now risks to core inflation remain to the upside, and we think markets should discount 20 to 30% odds for another hike. Our base case is the next move will be for a cut in mid-2024. Gotcha. Oh, yields nearing their peak. The German 10-year yield has reached our Q3, Q4 target of the area of 2.7, 2.8%. The 2-year yield hit their target as well. Notably, declining core inflation in Q4 of 23 and stalling growth should confirm by December that the rate hiking cycle is over, which should exert downside pressure on bond yields in early 2024, resulting in a bull steepening of the yield curve. Gotcha. Alrighty. Higher oil prices. This is definitely talking about inflation. Higher oil prices, but still scope for headline inflation to undershoot the ECB forecast. Gotcha. Our reverse engineering of the new ECB staff inflation projection suggests that the ECB's assumption for food and energy prices implied by the ECB's headline inflation projection appear quite stretched in the upside. We argue that a reversal of price levels could push headline CPI lower than the ECB currently predicts. Oh, so they're in the disinflation camp here on SEB. And euro dollar, Fed back in the driver's seat after the hawkish pause. All right. That, however, puts the dollar back in the euro dollar driver's seat and reintroduces the negative market sentiment we believe will be a key driver in the autumn. Near term, the downside for euro dollar is thus back in play, as we highlighted in the FX pilot, their monthly outlook on FX prices. If I go ahead and I pull this up, oh, nice little negative drift here going into the end of day. Yeah, this is euro dollar right here. And you can bet I am short that shit. Let's see here. ECB and SEB forecast. So SEB is definitely on the more disinflationary side. This is ECB projections for inflation, euro area. I'm gonna put that in the micro to macro section. Hold on a sec. Gotcha. Let's read in some extra commentary here. Copy that. Paste that. Make sure to always reference back to your sources when you're doing this sort of stuff with outlooks and the whatnot. Good old kitty cat coming to say hi. You know, you feed the cats, you say hi to them, and then you don't see them for the rest of the day. But I got a spot for the cat here on my desk, and she says hello. Yes, hello. Oh, she's a good girl. Yeah. I gotta set up a cat cam. Cat cam. Well, man, I'd say thanks for all the people who've been sticking around and watching all this time, because it's definitely a more chill stream. Definitely, you know, these Outlook sort of streams do not get as many views as my normal streams do, especially during major economic events. But I have a thing that the people who watch these Outlook review streams are usually the people who are actually doing half decent in their trading. And it's because this is the stuff that actually matters, right? Figuring out what the current expectations are for the week ahead, and then what the future expectations for events down the road could be, and how events that are coming up in the next week or 2 or 3, how changes in those events could impact our future expectations, and how they would immediately impact the movement of different assets. But you just got to get smart about just learning how things work. And the way I say, hey, you know, a decent way to get smart and get competent about this stuff is just read as many of these outlooks as you possibly can. That's a very quick way to get competent quick. Or competent fast, right? Quick way to get competent fast. At least that's my opinion, right? A lot of people would say, oh, you know, go get your master's in finance. Go do this, go do that. But it's like, you know... Oh, hello. Hello, kitty cat. And man, yeah, I wish, you know, I had that sort of stuff. Oh. Come on. Cat always reminds me never to take myself too seriously. No. Never take yourself too seriously. Yeah, but yeah, you know, it's like for guys who don't, you know, to actually have an idea of practical application of this stuff, it's like if you're willing to put in the work to learn as much as you possibly can, you'll eventually get on the level of guys who got their bachelor's. You know, it's not terribly difficult to read a textbook and to understand what the guys in these outlooks are saying. It just takes time. It just takes time. This is, you know, you're learning about the world, how it works, how people interpret it. It just takes time. You just go through this stuff. You clarify any misunderstood words, any concepts you don't understand. And then in time, you'll get it. And there are a lot of, and you know what? The guys who really should be doing this are the guys who have those finance degrees and accounting degrees and stats degrees. Because those are the guys who can actually do the most, who can probably make the most out of the information that comes out of these outlooks. Because, I mean, that's what these outlooks are mostly written for. Most of these outlooks are written for professionals. for discussion, right? And research with professionals, for professionals. So yeah, you know, there's my little tangent rant thing for the day. Done and done. All good, all good. Let's see here. Oh, look at this. Rate spreads. Gee, I wonder who does that. It's almost like, you know, it's almost like we got something like that down here. Yeah, it's almost like we're doing something a little similar there. Yeah. Yeah. Gotcha. All right, so this is the PMI analysis from S&P Global. So this is their, and this is written by Chris Williamson, kind of the head honcho over there for the PMI surveys. Chris Williamson is the, when you want to figure out something about the PMIs, anything by Chris is what you want. Like, he's the guy in charge of the PMI stuff. He was the head of the PMI stuff at IHS Markit, and when everything carried over to S&P Global, now he's still here. Yeah, man. Yeah, listening to Chris is definitely worth your time. Bum, 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 bum. Yeah, check that out. Quarterly GDP growth and the PMI, the composite PMI. You can see how they follow each other quite well. Quite well. It's a pretty decent proxy. I think the correlation's like 0.8. The low PMI readings in August and September point to a more subdued picture of the US economy in recent months than the robust expansion seen in the second quarter. Whereas the headline PMI averaged 53.6 over the second quarter, the third quarter has fallen to 50.8. This points to a moderation of annualized GDP growth from approximately 2 to 1% between the second and third quarters. The latest available GDP estimates put the second quarter growth at 2.4. So what this analysis tells me here is that maybe we have a downside surprise in economic growth out of the US. At least that's what it's pointing to. That's what it's implying, right? Both GDI and the PMI, in fact, signaled economic contraction in the fourth quarter of 2022 and the first quarter of 2023, followed by a return to growth in the second. The comparison of the PMI with GDI therefore suggests that GDI could weaken again in the third quarter. Gotcha. Interestingly, the PMI data has also aligned closely with the annual year-on-year change in GDP, and therefore, likewise, pointing to an annual rate of economic growth cooling in the third quarter. So still positive, but lower than the prior. Factory malaise. Let's see here. While production has been supported by factories fulfilling orders placed during the pandemic, assisted by supply chain improvements, these accumulated backlogs of work have now fallen continuously over the past year, due in part to an absence of new order inflows. New orders for goods fell for a fifth successive month. leading to another marked fall in backlogs in September. Although the rate of decline moderated to the lowest over the period, this continued depletion of order book bodes ill for the production trend in the months ahead. Gotcha. Sticky CPI. Let's see here. The index of average price changes for goods and services was unchanged. Yeah. Wrongly, higher wage and oil prices were also widely associated with a steepening rate of input cost inflation in manufacturing, albeit from a low base. Employment rises for now. The upturn in hiring was led by the service sector, though factories also continued to take on more staff at a modest pace. Future output expectations fell to a 9-month low, led by a souring of optimism in the services economy. Yeesh. We therefore watch for how these metrics develop in the coming months with close interest. So that's for the United States. This is for Eurozone, Japan, and the UK. But real quick, I want to get to how ending NERP would lift 10-year JGB yields. Yeah, if you're in on trading the yen, this might be something interesting to check out. The link to this is also in the Outlooks channel, but I did a little short blurb about it in the debt trading channel in the Plan the Profit Discord. Capital Market Outlook by Merrill. Recap. And that's the SX Liquid. All right. I'm not going to go over these. I'm going to be reading those on my own time as well. Man, so we've been going here for about an hour and a half. And I'm pretty sure between now and when I started this stream, I've probably been sent like another 50 emails. Let's see. Let me check my inbox here. No, I've only got like 12 more emails here. Cool. So I'm ahead on the stuff coming down in my inbox. Market scenario for next week, S&P 500 or SPY. I think I did that at the very beginning. Family time. My expectation was negative, and it's still going down. Yeah, the low will probably be in the sub 53.50 for the futures. So sub 53.50 for the futures for probably where the low on the month will end up. And for this, like, wow, that's quite a ways away. Yeah, I'm not sure about the spot. Let's pull up SPY. Yeah, that ain't looking so hot. That ain't looking so hot. Yeah, man. Not great. I'd rather trust the ES. I'd rather trust this distribution on the ES because the ES just has way more data. It has more data than that spot out of Boanda. And it has more data than the ETF. So yeah, I mean, for example, do I think we're going to be below 4,300 by the end of month? No, man, I think it's going to be pretty unlikely. Like, what is it? 19% of the time, 20% of the time, roughly. The low for the month is below what is it? 4296. Call it 4297. Yeah, even then, let's say the US GDP number comes out like how these PMIs for the US. Like, again, this little warning here with, oh, those GDP numbers could potentially surprise to the downside. I'm not totally sold on the analysis. I'd like to see more data, and this is just being implied. It's not being straight out called for. Because you can just look at this chart and see that the relationship isn't perfect, so the call out might not be totally perfect. And if that seems to be the case, if that seems to be the case where the PMIs are right for whatever reason, then I don't know how far down this thing could go this month. Yeah, I'm not sure how next month will play out exactly. I'm not sure exactly how next month's S&P will play out quite yet. But right now, this is kind of the more important question to answer. So it's like you're asking good questions. Though. It's like, okay, well, how's next month going to turn out? How's this week going to turn out? Yeah, again, my expectation for next week is you'll probably see some more negative drift. Hopefully, the thing bottoms out above 4,300 this month. But there's a not so insignificant probability of it going below 4,300, and then it becomes a falling knife situation where you just are guessing where the low ends up. Yeah, there's some real risk, especially if that US GDP comes in, like, if it comes closer, if the print is closer to 1%, if the US GDP is closer to 1%, that'll be a huge surprise to the downside when everyone's expecting 2. I mean, when the New Zealand data printed, oh, sorry, I forgot the transition. When the New Zealand GDP data had the positive 0.5% surprise, you can see the positive move, right? Well, now imagine if we got a full 1% move out of the United States to the downside. Like, that would, like, yeah, you're going to see 4,200, no problem. 4,200, the question isn't, are you going to see 4,200? The question is it reasonable to go to 41? Like, because the volatility would start to cluster and the short selling and the gamma squeeze, like, you got to know what's up and what can move stuff in that scenario of a GDP surprise to the downside. I'm not expecting a GDP surprise to the downside, but that PMI data says there's a shot, so maybe keep an eye open for any more analysis going out into the next week on those sorts of risks. I know I'll be looking for that sort of stuff. And if I see any of that, I'll post it into the Discord. So, yeah. I think that is going to be that. I've been going now for like an hour and a half, an hour and 40 minutes, you guys. It has been a good stream covering all this research. I feel very happy with the time I spent here on the stream. And all my trades are doing very, very well. I've made back, I had those 15, 20 paper cuts, but only because I know how to do some proper risk management. Now I've made up all that loss and then some. It's all down just to playing some good odds, my man. Just playing some good odds and knowing what you're doing. Alrighty, you guys, that's the outro music. Thank you guys for watching. I appreciate all you guys for staying subscribed and helping the channel grow. I'll see you on Monday. Have a good weekend. Don't know why the music paused there. Yeah, it's just loading. And I will see you guys in a bit. And maybe on the Discord too. Alrighty. In a bit, you guys.